Well, welcome to our reporting season coverage, your shortcut to the results that matter. I'm Nadine Blaney. Well, IAG has seen its first half profit leap by more than 90% to $778 million, thanks to more favorable weather and a $200 million release from the COVID business interruption provision. It paid out $5.2 billion worth of claims in the period, with its insurance profit up almost 56% to $957 million. The interim dividend coming in at 12 cents per share for the period. That's lower than consensus. We spoke with CFO William McDonnell about why the market seems to have been expecting more on the dividend front.
We have a very clear dividend policy that we maintain, which is that we'll pay out 60 to 80% of earnings as our dividend for the full year, and we abide by that. We tend to pay a lower dividend at interim, and then to do a larger amount at final, and that's the same practice you're seeing this time. Now, we also actually have a very strong capital position at the half year, so above our target range, which may be partly what's behind some of those comments. But of course, as well as the interim dividend, there's 22 points of that capital position we're holding back, which is the capital we're holding for the RACQ acquisition that we talked about a moment ago. And so when you allow for both of those, that brings our capital down into the top of our target range. And of course, puts us in a good position for any opportunities or returning more capital to shareholders, in the coming periods.
Meantime, Origin Energy's stat profit rose to just over $1 billion in the first half, a jump just shy of 27%. Underlying net profit also rose on improved earnings from its integrated gas business and lower tax expenses, which offset lower earnings from its energy market business and Octopus Energy. Origin is sticking with its previously released guidance, with gross electricity profit pressured by lower wholesale costs and reduced retail margins, along with higher coal prices. But it does say that it's on track to deliver on its cost-cutting targets. It's increased its fully franked dividend to 30 cents per share. Well, Medicus will distribute a 25-cent interim dividend as its half-year net profit jumped 43%. PME also flagged to the market that it remains debt-free, as usual, not providing specific guidance. And with over $180 million in cash reserves, Medicus CEO Dr. Sam Hupert has hinted it might be used for future M&A, but has not provided specifics. Shareholders getting that 25 cents interim dividend per share, and we'll be speaking with the CEO later this hour. Meantime, South32 has increased its first half profit by almost 600% to $360 million thanks to higher copper and aluminium output, coupled with strong commodity prices. Revenue from continuing operations rose 25% to $3.1 billion, while underlying revenue fell 1% to $3.85 billion. A fully franked dividend of 3.4 cents per share will be paid to shareholders. Treasury Wine Estates expects earnings for the full year to come in at the lower end of its previously guided range on a cut in expectations for its Treasury Premium Brands business. It comes after TWE posted net profit of just shy of $221 million, up 32.5%. on net profit of $240 million. On China, Treasury Wine says that Penfolds delivered a, quote, outstanding result with strong growth in shipments there and to other Asian markets as well. It's paying an interim dividend of 20 cents, 70% franked. And HomeCo Daily Needs REIT has returned to profit, posting a first half of $160.8 million, up from a near $11 million loss last year. Funds from operations came in close to $90 million, and that's also up on the first half of the previous year. Checking out other earnings, and the stock exchange operator has posted a 5.6% rise in first half profit to $243.5 million, thanks to higher operating revenue, which offset a $10 million cost associated with the relocation of its Sydney office. The ASX will pay shareholders an interim dividend of $1.11 per share. That's up almost 10% on last year, fully franked. Meantime, Downer EDI says its turnaround is on track. It's reporting a near 5% increase in first half profit to $75.5 million. However, group revenue fell 6.5%, with earnings hit by a slew of one-off costs. It's paying an interim dividend of 10.8 cents per share. And Northern Star Resources has declared a record interim dividend of 25 cents per share, up 67% thanks to those record high gold prices. Half-year earnings included cash earnings of $1.1 billion, up 64% on the prior period. And Temple & Webster says that growth in new and returning customers, as well as higher average order values, has led to a 24% increase in first half revenue to $314 million. Revenue is up 16% year on year, and that's despite the cost of living crisis, and its market share is at an all-time high of 2.9%.